It's a pleasure for us to be here this morning and bringing on you the information about business structure and business development. And we're going to bring up our presentation here now. One of the things that we want everybody to understand, this is the beginning of a new year, all right? And so we want people to start it correctly at the beginning of the year. And one of the things we want people to understand is how business structure and business development work. As our new businesses, the one thing I tell people, last year is over with, okay? But we want you to be prepared for the next year. But we also want you to understand when you get ready to start doing your taxation this year, what are the some of the things you should be looking for in reducing taxable income, okay? But we wanted to show you how, if we did anything incorrect last year, how we make and go back and correct it for you some this year. But our mission is to educate and empower everyone to understand accountability to ensure sustainability with a solid foundation. But with this mission statement, we are going to be amending that this year. And it will say to ensure sustainability along with scalability with a solid foundation. We want our business owners to understand scalability, okay? We work with clients, as Mr. Bowen said, from across the country. We have offices in 5 states. We're working on opening our office our first office in the territory of Puerto Rico. And so these are things that we want people to understand. This is not only a North Carolina issue or South Carolina issue. This is throughout the country at business development in which we're trying to sustain today. So we're going to be taking you from the beginning to the end and understanding business development, okay? All right. Now, how to give this disclaimer. The information you hear today, if it's going to interest you, is for tax purpose only and its relations. We are not lawyers, but we can recommend you lawyers we work with that can provide you legal advice and or information, okay? We do have attorneys we work with in our firm, okay? To provide consultancy and training services for financial planning and business management, to empower, educate, and assist in developing a solid foundation, best business practices and structure, and identify and develop solid financial management strategies through training and professional development. Within our firm, as we said, we offer payroll services, we offer financial, we offer insurance division, not only taxation. We build companies here. We build our entities across the country, okay? So we're going to talk to you today about what are you? So you were told you were a business and what does that mean to you, okay? Now we're going to talk about these structures today. And for the sake of time, we're going to move along pretty quickly, but I encourage you to ask questions and we're going to give everyone time to ask questions. We're going to talk about sole proprietorship, partnership, S corporation, C corporation, nonprofit briefly. But the one thing we're going to have an emphasis on is this thing called limited liability company, these LLCs, okay? This is where most people have a problem in these LLCs. Many times when we're in our conferences, as we do a lot of in-person conferences, we ask that question. How many people know how many ways an LLC can file? Many people can't answer that question, but we're going to answer that for you today, okay? Now, first, we're going to start with the SS4 form, so commonly referred to as the EIN number, okay? This is the most important piece of paper you can have, okay? This is the most important piece of paper you can have in your business entity or in your beginning of a new structure is your EIN number. But this is where people mess up the most from the absolute beginning, okay? Yes, you can put your name, address, city, state, but when we get out of section 9A, it asks her what type of entity you are. Where people have the most problems here is when they check this box, they do not understand this is your federal filing requirements, okay? When you check this box, this is communicating with the IRS, with the federal. When you go down to your Secretary of State, as we're getting into, and you structure your entities, you're only talking to the state. Now here, you're talking to the federal, okay? But when you check sole proprietorship, you just told the IRS my filing requirement is going to be a Schedule C on 1040. When you check partnership, you just told the IRS, I'm going to be filing a 1065. When you check corporation, you just told the IRS I'm going to be filing 1120. There's 1120S, there's 1120C. If you check church, you just told the IRS that I won't be filing any taxes, but you'll be surprised how many churches are trying to file taxes. But what people have the problem here the most is with this piece of paper here, in not understanding how your filing requirements affects your structure and your infrastructure, okay? So remember this form, the EIN number. Now, people ask me all the time, do I need an EIN number? The answer is no. People say, should I have an EIN number? Absolutely yes. The one thing you should never use is your Social Security number. That's one of the purposes for EIN number, so you won't have to use your Social Security number. You absolutely should have an EIN number, okay? Now, This piece of paper, when you apply for EIN number, you're going to get this piece of paper that no one reads, okay? But we're going to show you, this is a very, very important piece of paper, but we're going to come back to this piece of paper to show you why it's important. You're only going to get it one time, and you must keep this for your permanent records, okay? All right, now, we're going to talk about this thing called a sole proprietorship, also called an independent contractor, consultant, or freelancer. One-person operation, okay? The business may have a number of employees or a hired person, but the proprietor owns, runs, and manages business. No funds are required to start this type of business. Only report income and expenses of the business on a 1040 Schedule C. Okay. Now, this is a sole proprietorship. Now, sole proprietorship, easy to organize, owners free to make decisions. But the biggest disadvantage to a sole proprietorship, unlimited liability to owner. Okay. As a sole proprietorship, you are the individual. You carry the responsibility. You carry the liability. If ABC Enterprise made $100 a day, ABC Enterprise didn't make one dime. The individual who is a sole proprietor made $100 a day. The individual who is a sole proprietor is responsible for all tax liability, the individual, okay? Now, one thing about a sole proprietorship, if you do not keep good records to reduce taxable income, you, the individual, on your personal tax return is going to be responsible for tax liability. Now, when we say keep good records, we mean how do you legally reduce taxable income? Okay. Now, one of the things we say, for example, if your company made $100 a day, and you say, well, I spent $50, I drove out here to this training program and hear somebody talk about taxation, and I spent $50 in fuel. Well, next year this time, your tax income only going to be $50. Well, you say, well, I stopped by my local Walmart, and I didn't know if I needed some pencil and paper, office supplies to write down what I heard, and I spent $20. Next year this time, your tax income is going to be $30, okay? But you say, lo and behold, I got back home, I had a water leak at my office, and I had repairmen at my office was a water leak, and I spent $40. Next year this time, what is your tax income? Zero. Now, the reason I said, if you spent $50 in fuel today, $20 in legal office expense today, and $4 in repair maintenance at your office at your home, if my math is right, you made $100 a day, but you spent $110 in legal tax expenses. There's zero taxable income, okay? We have a lot of people all the time come to the office and say, I went to so-and-so, and they said they're going to hook me up, and I don't have to pay taxes. Well, sometimes they come to the office so hooked up, we can't get them unhooked. We tell people all the time, you do not have to get hooked up. There are legal tax deductions that you can claim to legally reduce taxable income. We tell a lot of our clients all the time. Every client comes to the office all the time saying, we want to operate on the table. I tell them, get from on that table now. The Irish on that table too. Get from on that table, get on top of that table, and run your business successfully and correctly. Okay. Owners receive all profits, easy to discontinue. If owner materially participate, you can offset income. This is what we're going to show about the sole proprietorship. We want people to understand the one thing we advise our clients on: do not operate as a sole proprietor. And we're going to explain to you why. Okay. Now, we're going to talk about the Schedule C. This goes on your personal tax return. Okay. A Schedule C. This is a profit and loss for sole proprietors. Okay. But remember now, when you put your income here, this is you, the individual's income on a business form Schedule C. This is not a separate entity of yourself. This is you. Gross receipt, this is you. Okay, and here, all the expenses. Now, we're going to go over legal deduction for our sole proprietors, or for our businesses. Advertising, car and truck, commission and fees, contract labor, depreciation. A lot of our communities miss that thing called depreciation. You want depreciation. You want to be able to utilize depreciation. When you buy company cars, as you put your cars, your company names and stuff, you can't write that monthly payment off. We're going to get to that when we show you financials. But you can capture the depreciation. Depreciation is going to carry you over a certain number of years. But the one thing about depreciation is called an add back. Okay? Meaning, just for example purpose only, quickly as we move along, if you say I bought a car for $50,000 and I carry $10,000 appreciation over for the next 5 years. Now, that's how it works for example only now, okay? That means that for the next 5 years, you got a legal tax deduction with the depreciable expenses. But you always add depreciation interest back in. So if your business made $50,000, if your business showed a profit of $10,000, you had $10,000 appreciation. Guess what? Your business actually made $20,000. Now, if your business said I lost $5,000 and I had $10 appreciation, guess what? Your business actually made $5,000 because you always add depreciation back in. It reduces tax income, but you always add that back in. Okay. Employee benefits and programs. Okay. Insurance, interest, legal and professional fees, office expense, pension and profit sharing. Okay. Rent or lease, we get this a lot. A lot of people won't keep up with receipts, documentation on rent or lease. This is all legal tax deduction. Repair and maintenance, supplies, travel and license expenses, travel, meals and entertainment, utilities. And we always stop at wages, okay? Wages is a legal tax deduction to your company, okay? But we get people all the time saying, I'm getting draws, I'm paying estimated taxes. We tell people, if you are taking draws, if you take an estimated you pay estimated taxes. When you take that draw, at the end of the year, you're gonna have to pay taxes on all that if you're not paying estimated taxes. We tell people, stop paying estimated taxes. Put yourself on a payroll, okay? Because when you're paying yourself for a company when you can, you're paying Social Security, Medicaid. But one thing a lot of people miss when they're paying their payroll, they're missing the fact that you're also paying unemployment, okay? People you can qualify for unemployment. Okay? If you make your company made $50,000, you pay yourself $30,000 in payroll. Guess what? You're only going to have to spend out $70,000 because now $30,000 is a legal tax deduction and you've already paid taxes on it. Okay? So this is one of the reasons we tell people as situations are different, please consider wages. Okay, that's why we have a payroll department here in our firm. Okay, but these are all legal business expenses and deductions. Okay, now we're going to talk about your financials. Okay, what does it mean to have financials? Okay, your profit and loss statement, your balance sheet, your cash flow statement, and your general ledger. These are for all of our clients in our firm. We provide one booklet for them for all financial statements. Ladies and gentlemen, when you are trying to apply for funding and you're trying to acquire funding, the first thing in most institutions want to ask you, where is your balance sheet? Where is your P&L? They want your financial statements. You cannot go to a financial institution, file in Schedule C's. Now you got $100,000 on line one, negative $20,000 on the bottom line. You haven't made any money. You're filing yourself as a Schedule C. You haven't made any money. Okay. One of the things we want people to understand how that you have to have legal deduction will reduce your taxable income, but again, you still need to show that you have some type of gainful profit in your entities, okay? Or you have financials to clearly identify where your financial, where your shortfall is showing, okay? One thing, a profit and loss statement, the balance sheet, the cash flow statement, the trial balance and general ledger. These are your 5 financial statements we provide in our firm for all of our clients in one booklet, okay? Now, your profit and loss statement, known as the income statement, is a financial statement that details income and expenses. For the second time, we won't read the entire definition. But your P&L statement is very important. Many call it a P&L, okay? Now, here's how your profit and loss look. But one thing about a P&L, your total income and total expenses, this is your tax return, okay? This is your tax return, okay? We tell people all the time, a lot of people say, well, I got to go find this and find that. If you keep your financials throughout the year, at the end of the year, this time, once you receive your January statements, here is your tax return, okay? Already categorized, already deposited expenses. But we tell people about understanding where your income is, okay? You only pay taxes on earned income. A lot of people come in who you utilize throughout the years credit line, okay? If you did not earn this money, you loan your company's money, their income is not taxable, okay? Only income that's taxable is earned income. Only income tax is earned income, okay? So this is how your profit loss statement looks, okay? Now, here's your balance sheet. This is very, very important. Most people want your balance sheet. Provides you a snapshot of what your company owns and what you owe. This is how a balance sheet looks. This is the first thing institutions want, your balance sheet. What is my company? What's my assets and what's my liabilities? Here's where the balance sheet comes in. It's very, very important, okay? Now, we're talking about the cash flow statement, referred to as a cash transfers in and out of the company. Here's how a cash flow statement looks, okay? You want to always know what your cash flow statement looks like, okay? Now, we talk about trial balance, bookkeeping worksheet, which balances all ledgers. Now, this is how your trial balance look. All your debits and all your asset balances. Now, the next one is very, very important. This general ledger. This represents a keeping system of your company financial data with the debits and credits account validating your trial balance. What the general ledger is, it tells you everything you did from January 1st to December 31st, every day of the year. This is how a general ledger looks, okay? On your P&L, you have categorization. But if you have a categorization of how many, how much fuel did I have purchased this year, you open your general ledger, it tells you from January 1st to December 31st, every purchase you made and where it came from, okay? This is why the general ledger is super important, okay? Because it identifies all income and all expenses, okay? All right. Now, ladies and gentlemen, as we go out and we are putting together our financials, this form is called a W-9 form. Many people as a sole proprietorship utilize the W-9, okay? Now, one thing about a W-9 form, it's going to ask you name of the business, the type. Well, the biggest mistake that people make with W-9s, they put their social security number on the form. This is telling you, the recipient, when you give me my 1099, if I'm required to receive one, who is this money being paid to? Many people put that social security number on there. That means that money coming directly to you. It says social security number or EIN number. Always apply your EIN number. Do not put your social security number on this form, okay? Even if you do not have a social EIN number, apply for one. You get those instantly, okay? At no cost, okay? You always want to utilize your EIN number. This is where a lot of people make their mistake. They put that social security number on that W-9. Please do not put a social security number on that W-9. Social security number or employee identification, okay? All right. Now, we're going to talk about entities. We're going to get into disregarded entities here, also called a pass-through entity. That's one that's distinct from the owners for some purposes. But when it comes down to taxes, sole proprietorship and partnership, for example, are disregarded entities because the owners of these corporations report business income and expense on their personal tax returns. Okay? Corporations are generally an example of a business entity that is not disregarded, except for S corporation, rich real estate investment trust. A corporation generally pays taxes on its profits before distribution to shareholders. We're going to talk about how beginning of entities working. One, partnerships, an aggregation of owners. Two or more persons contribute assets to business that may share management responsibility, profit, and losses. This is called a general partnership. A general partnership, okay? A general partnership is called a 1065, very easy to organize. Better financial strength and sole products combine all judgments and more than one person. Has legal status, each person has a personal interest in the business, and if partners materially participate, loss can offset income. Ladies and gentlemen, this is how I call it a general partnership. We got people coming all the time saying, me and my buddies, we ate together, slept together, we did everything together. But one thing I tell them, they never made money together. So we want to explain to you how these entities work, how these structures work. This is a general partnership. Do we recommend general partnership? No. But we want to show you how we recommend bringing partners together, okay? Now, this is a 1065. There's absolutely nothing wrong with this form now. This is a form 1065, how you file a general partnership, okay? But this is your K-1 form. You cannot file your personal tax return without receiving the K-1 form, okay? Now, only thing that's going to issue the K-1, general partnership, S corporation. We're going to show that very shortly, okay? This is called a general partnership, okay? Now we're going to get into the big boys, okay? A corporation or person who establishes a legal entity filing article of incorporation states the Secretary of State granted them certain legal rights, privileges, and liabilities. A S corporation is an eligible domestic corporation that wants to avoid double taxation, once to the shareholders, again to the corporation, okay, by electing the status of a 2553 election by a small business corporation. An S corporation is not a sole proprietorship or partnership. Let me explain what I just read, okay? When you go down to your Secretary of State, in any state or Commonwealth, when you go to your Secretary of State and you file articles of organization, you just form a limited liability company within the state of North Carolina. When you file an articles of incorporation, you just file a corporation within the state of North Carolina. Now, one thing about an articles of organization, it is not a corporation. A LLC is an organization of a group of people. Okay, I'm going to repeat that. A limited liability company is not a corporation. It's an organization of a group of people. Okay, when you form these LLCs, when you form these INCs, you are forming a corporation within the state of North Carolina. Now, when you go down to the Secretary of State and you file this organization or a corporation or LLPs or PLLCs, whatever the entity is, you are not talking to the federal. You're only talking to the state. Many people feel when I go to my Secretary of State, I'm talking to federal and the state. No, you're not. You're only talking to the state. Okay. Now, when we are filing an organization, okay, this is called things called an LLC. Has some characteristics of a partnership and some characteristics of a corporation. An LLC may be organized to avoid double taxation with frequent companies as corporations. The owner of LLC is called members and managers. LLCs are managed by members or managers who may or may not be members. The distinction of a member managed LLC or a managed LLC. When you form an organization and you go down and say, 10 people say I'm going to form this entity. If we say we're going to pick one person to be the manager of this LLC to manage this entity, guess what? Now you're a managed LLC. But if you said that we're going to have all 10 people making these decisions, now you are a member managed LLC. That's the distinction between the two. When you file a limited liability companies, most people don't understand. An LLC is not an incorporation. That's the biggest thing what people don't understand. But when people have problems with LLC, one, don't want to think I know what each member is doing. Where people have problems when they form LLCs, they don't understand that a limited liability company can choose to file as a sole proprietorship, partnership, or elect to be taxed as S corporation. Here is where people have problems, not understanding the requirements of limited liability companies. Now, y'all remember that piece of paper called an EIN number? And I told everyone, I said, that's what people have the most mess up for, have the most problems from the absolute beginning. Here's one of the reasons that people have problems with limited liability companies. When you go down and you fill out that piece of paper, that EIN number, the first thing it's going to ask you, especially when you check that box of LLC, it's going to ask you, are you a single member LLC or multi-member? Well, guess what? There's nothing wrong if you're a single member LLC, if a one-person form, people are going to ask, are you a single member or multi-member? Most people say, I'm a single member, okay? If you are two or more people say, we're going to form the LLC, it's going to ask you, are you a single member LLC or multi-member? Most people are going to put multi-member. There's nothing wrong with that. But guess what? When you check that box that you're a single member LLC on that EIN number, you just told the IRS that you are a sole proprietor. When you check that box that you're multi-member, you just told the IRS that my filing requirement is going to be a 1065 partnership. What you should have did, you should have checked that box, corporation. That way now you just told the IRS that I'm going to be taxed as a corporation. And when you got that piece of paper, that EIN number, you should have seen this, or you should, it would have told you that you got 75 days to fill this form, 2553 out. Okay, that's called election of a small business corporation. When you form your entity, many people, the intent is for this to be me, this to be my entity. My cars, my equipment, all going to my entity. But when you apply for that EIN number, you should have checked corporation. And when that letter that you got, we're going to show you, it's going to tell you got 75 days to fill this 2553 out to be taxed as S corporation. If you don't fill this thing out within 75 days, guess what? You are going to be denied, okay, of being taxed as an S corporation. Unless you put across the top, you file in pencil, crayon, blood, or ink, filing revenue procedure 2013-30, okay? Filing Rev Proc. You literally write it across the top, filing Rev Proc procedure 2013-30. That is your late filing procedure, okay? When you apply for your organization, when you apply for your EIN number, you got 75 days to fill out 2553 and asking to be elected as a corporation, okay? Now, this is where a lot of people miss this form. Now, the second page is absolutely crucial, okay? Because this tells who owns the company, okay? Now, we got people, these friends and partners coming in and say, you know, I own 51%, my friend owns 49%. The person who owns the biggest interest is the controlling person, Okay. So, but this tells who owns it. This is how we pass it down generationally. This is how we pass it down to our children. We got to understand we need to pass the entities down, not sole proprietors. One thing about setting up with an entity, okay, different from a sole proprietor, okay? For example, if you say I'm retired, I'm working with the state, we work with a lot of military here, with all the states we serve around the country and stuff, and a lot of people have limited income. Well, one thing about structuring the entity correctly, if you say I only can make $1,000 a month, this can make $1 million because you, the individual, have not made one dent down yet. Okay. When you file your 2553s and you give your ownership, this is your entity. It's making the money. It's carrying liability. It's receiving the income, not you. I tell people all the time, it's not how much money you make, it's how you receive the money you make. You want your entities to receive the money, not you. You want your entities applying for the credit lines. I didn't say loan, credit lines, not you. When you are buying these company cars, you are buying this equipment, you want the entity to carry the responsibility, not you. I'm sure a lot of people have seen people who have went broke today and drive a brand new car tomorrow. Why? They never went broke. The entity went broke. A lot of people understand you can have multiple entities. If one entity make 10,000, one entity lose 10,000, that can offset each other. Okay, that's no taxable income because they offsets. Okay, the one thing about your vehicles, the entity owns it. This is a lot of times why we tell people to understand your financial statement. You cannot write off a car payment, but you carry depreciation. But when you purchase those cars and those equipment, it goes to the entity's balance sheets. It goes to your entity balance sheets, okay? But it's not in your name. It's in the entity name. You are not carrying the tax liability. You are not carrying the responsibility. The entity is carrying the responsibility. You operate the entities, okay? And this is why we want to make sure people understand. If you are, it's January the 4th, if you are operating as a sole proprietorship, stop it today. We want you to start an entity. We get a question all the time. How big do it have to be from the beginning? Okay. Another mistake that people make, they say, well, I went through all my deductions and stuff. They come in here and they say, I went through all my deductions and I started my business 2 years ago, but they didn't file the expenses to the tax return 2 years ago. Why? Well, say I forgot to make money before I start claiming expenses. Absolutely not. When you begin your business this morning, you are now in business. You have to spend money to make money. You must keep up the receipts because why? That's called startup costs. Your entity also probably has startup costs. You got to spend money to make money. So that's your startup cost. But we want people to understand these entities are absolutely crucial in sustainability and taking the legal liability off the person, but putting it on the entity. You can reset an entity, but you can't reset yourself. You can get rid of it and start a new one, but you can't get rid of yourself. You can't start a new person. So this is why we want people to understand entity structures are crucial in our communities. In our social disadvantaged certain communities, we are operating too many businesses under our own names, under our own social security numbers. When you apply for a vehicle, you should not be signing as a co-signer. You should apply a commercial application. You can be the guarantor on the first one. That means I'm signing on behalf of the company, okay? If you say I only can make $1,000 a month, guess what? This can make $1 million and pay yourself $900 a month for the company. It is operating, not you. Okay, people ask me all the time. On the 2553, who should I put on it? Should I put my husband and wife? I tell people all the time. We recommend if you love each other, you know you ain't going nowhere, put it in one person's name because it's marital assets. You protect and insulate the other the other spouse. Have doubts to put in two people's names. Okay, but this is the purpose of these entities. Okay. Now, you remember I told you on that EIN number where you're getting that letter. You see this line right here where it says it must timely file 2553 election to be S corporate. This piece of paper right here is the most important piece of paper, but no one reads this paper. it clearly tells you here, if anyone has an EIN number, I want you to go pull your letter because it's telling you what is your filing requirement. This is a sole proprietorship all day long. But if you was a 1065, it would have it right here in the middle. Form 1065 with a date. Form 1120 with a date. 940 with a date. It's telling you all your filing requirements. But we can always go back and correct those filing requirements. We don't have to get your new EIN number. We're just going to change the filing requirements. In some situations, they will issue another, but we're going to change the filing requirements, okay? This is how entities are super important in our communities and at the beginning of this year. This is why entities are absolutely important, okay? Double taxation earnings is avoided. Friends business is restricted. Same as an S corporation, shareholders pay taxes on undistributed income. But the most important thing, has all aspects of a corporation. An S corporation pays no income taxes. Income taxes purpose are on the individual on their personal tax return. When you form an S corporation, you are going to get a K-1 form, and it must go to your personal tax return. You are going to get a K-1 form. 1120 is where you're going to file your personal. 1120 is where you're going to file your corporate tax return, whether it be an LLC or INC. If it's an L1120S, S corporation. If you're a C corporation, you file 1120. But 1120S is where you file this tax return. If you are, and you're going to get a K-1 form, you cannot file your personal tax returns before you file your corporate, because you got to put the K-1 form on your personal tax return, okay? The K-1 form goes to your personal tax return. Here's where you have your plus or your minuses, okay? Now, one thing a lot of people don't understand, a corporate tax return is due March 15th. A personal tax return is due April 15th, and nonprofits due May 15th, okay? Now, a lot of people understand corporate tax returns are due March 15th. You file them before so you can get the K-1 form to go on your personal tax return, okay? That is your K-1 form, all right? Now, a C corporation, license perpetual, double taxation. It pays tax on all distributed income, and it pays taxes. S corporation does not pay taxes. If you pay yourself $30,000 for S corporation, the S corporation loses $10,000. Guess what? Your tax income is on $20,000. It offsets your personal tax. That's one thing about C corporation. It does not benefit you personally. S corporation does. Okay. We do not recommend C corporation. They are standalones. Okay. But most people operate under S corporation. We recommend S corporation. Okay. Those are C corporations. Okay. Now, 1120S. You saw the difference. 1120, 1120S. 1120 is where you file C corporation. 1120S is where you file S corporation. But again, these entities are separate from the individual. These are the things that we're trying to get people to understand. They're separate from the individuals, okay? In-home office. A lot of people miss in-home offices, okay? The qualifies as deduction area home use, but must be regularly used by business. If you have an in-home office, okay, and your office in your home is 13.1, 12.1. Now you can deduct 12.1 on your home mortgage interest, real estate tax, utilities, insurance, rent, or any repairs to the office portion of your house. A lot of people have in-home office. A lot of people miss this deduction, okay? One thing about here in the office, 8829 is where you file the in-home office, okay? Now, we're going to go through forms that we must, that we want people to understand, that a lot of times we have tax liabilities that we can avoid. One of the things is a reduction of tax from Form 982. Form 982, this form right here, a lot of people miss. If many people have situations where they receive 1099-Cs, cancellation of debt, things like that happen. But the biggest mistake with 1099-Cs, they're going to tell you you have to pay tax on that. Okay, you got a foreclosure, you had a home, you lost a car, credit cards, whatever. They give you 1099-Cs. If you receive a 1099-C, you're going to put it on your tax return. Okay, you're going to end up paying tax on it, not necessarily. If you get a 1099-C, utilize this form called a 982, reduction of tax attribute due to discharge. You push your 982 here. If you qualify for discharge due to indebtedness in Chapter 11, discharge of debts in the extent of insolvency, I'm broke. If you have any type of agriculture operation, discharge of farm, qualified personal business deduction, discharge of the principal resident, you place that 1099-C on this form. If you qualify, it's excluded from your income. You do not pay taxes on that. because it's excluded from your income. A lot of people in our community are receiving cancellation of debt. And the first thing our people say, well, I got this 1099-C, I don't want the IRS to know I have it. If it's in your hand, the IRS know you got it. We get that all the time. People come in with 1099s and say, I don't want the IRS to know I got this 1099. They already know you got it. But the thing is, how do you legally reduce the taxable income on it? 1099-Cs, you put on 982. 1099s, you legally utilize legal tax deduction. But this is a form a lot of people miss. It is exclusive from your income. 843s, a lot of people have penalties. A lot of people owe money. Guess what? Put on form 843, ask for an abatement of that penalty, and they could exclude that penalty. Okay? Now, a lot of people understand. A lot of people get garnished. The reason you get garnished is for you to contact the IRS to make payment arrangements. Okay? Once you make a payment arrangement, they can immediately stop the garnishment. But one thing that people don't understand, if you happen to go uncollectible, not excluding liens may be filed, if you go uncollectible, you can continue to operate your business, put stuff in your name. You got to put everything in mama's name anymore. Put everything in your name. If you make payment arrangement, you are in compliance. If you're uncollectible, they are not going to mess with you. Okay? They're going to give you time to get yourself together and come back and refill your financials out at a later period of time. A lot of people understand. You can apply for abatement. You can go back and amend the tax returns up to 3 years to get money owed to you. You can go back 2 years to get money that you've been paying on arrangement. If you have a payment arrangement, you go back and amend the return. We correct the tax return. That you can get all that money back up to 2 years, and it will stop the liability or reduce your taxable liability. Okay, this is Form 843. A lot of people get liens. Application for draw federal lien 1277. Okay, a lot of people get equipment in liens. Application for draw lien here Form 14135. Okay, you must always understand in payroll, you're gonna have this your annual unemployment. You're gonna have a 940 form that you fill out for your payroll. We ask people to do payroll. 941s is your payroll tax form. One thing I want people to understand, a 941 payroll and personal tax are two separate things. This is a tax form 941. Okay, this is not your personal tax. A lot of people get that they're all the same. They are not. Any type of agricultural operation is a 943. Now, we want points for remembrance here, okay? Know what type of business entity you are. That understand your requirement. It starts with the EIN number, okay? Your EIN number determines your foundation. It determines what your requirements are. Foundation of your business will determine your tax liabilities, okay? A lot of clients don't understand that foundation. Am I LLC? Am I 1065? Am I a C corporation? But what happens when you apply for these EIN numbers, when you check those boxes, you're not understanding what that foundation are. As we assist individuals here in understanding for tax purpose only, the entity structure, how to form your entity correctly. Always have accurate accountability of daily operation. One thing that people come to us all the time, they say, what is the best system I can use to keep up with all of my expenses? I said, something you understand. Do not go out here and get the latest version of QuickBooks with an I-9 backup with a Pentium chip if you don't understand. Something that tells you 2 + 2 = 4. That's what you need. Utilize something you understand, okay? All daily expenditures may have tax implication reducing the taxable income. One thing about daily expenditures, most people think taxation for businessmen and women are from January 1st to April 15th. Businessmen and women and individuals in many situations, taxation is January 1st to December 31st, every day of the year. Every day of the year, you carry taxable implication to reduce taxable income. The one thing that we don't do, we don't keep good records. We have to keep good records. We must understand, when we supply our clients with our financial statements, we make sure they have all their financial statements. This is how you reduce your taxable income. This is how you keep a record. When we have people this booklet, the first thing that people say, I did not know I spent that much money. The second thing that most people say is, I did not know I made that much money. And this is one of the things that we're trying to keep people to understand, how entity structures are very important. How understanding operating as a sole proprietorship, 1065 partnership, how LLCs really works. We have too many people come in, do not understand. a limited liability company has the option of choosing which way it wants to file. We want people to understand when you form an entity, do not operate as a sole proprietor, okay? Because as a sole proprietor, you are responsible. You are receiving the income. You are receiving liability. In many cases, although you have a limited liability company, you, the individual, as a sole proprietor, you carry all the responsibilities. So we want people to understand how we now, at the beginning of this year, now's the time to start from the absolute beginning. A lot of people say, well, I have a limited liability company of LLC, and I was taxed as a sole proprietor last year. Yes, you can file the 2533 and go back and ask for recognition from 1/1/2023, okay? Now, but we advise a lot of our clients that we start from 1/1 this year, 2024, but we can go back and change those filing requirements, okay? But the biggest thing we want people to understand is this is the time of year that we must prepare for next year. This is the time of year we prepare for last year. If you have any time, a lot of people say, I don't have receipts. If you're a business owner and you buy from a particular vendor, go back and ask them for your annual purchase. Get your report, okay? That is a legal document showing how all your purchases from them. A lot of people got credit cards. Print your annual statements off. Print the annual statements off. Many credit cards shows already have it categorized for you. What was the categorization of this expenditure? But a lot of people with credit cards come in and say, well, I received a credit card. I put $10 on my credit card last year, but I only paid $3,000 on it. So I want to claim the expenses that I paid. Absolutely not. You claim the entire credit card because you made those purchases in that year. This is what we get a lot of people understand. You claim the entire credit card, okay? And one thing I want people to understand, even from a personal perspective, go to your local CVS's, go to your local Walgreens, pull down your Schedule A's, pull your prescription, get your report. There's a report that can pull down on you, not only to your vendors, but as business owners, men and women personally. Everything you spend in many businesses, especially our vendors and our business owners, you can get your annual report. That is a legal tax document. We can reduce taxable income with those documents. We can make sure you follow your Schedule A's, you doing your personal deduction. These are legal documents. Many people say, I don't have the receipts. Pull your reports, okay? But one thing we tell people in pulling reports and bank accounts, never co-mingle funds. Please, never co-mingle funds, meaning never put your business income into your personal income. That's you put all your A's in one basket. If you drop that basket, all your A's break up at one time. If you are an enterprise, and we tell people there's nothing wrong with having 1, 2, 3, 4 entities, okay? Because each entity carries itself. People say, well, I want to form 4 entities, but I'm a parent company. No, let these entities stand alone. Let these entities make. If you have 3 entities, you can put 3 lines of credit. You have 3 entities, 3 credit cards. You have 3 entities. Each entity can buy a car. Each entity can buy equipment. But one thing about entities, people don't understand, a corporation is not required to give another corporation a 1099. That's one thing about entities. You're required to give an individual over $600 a 1099, but an entity is not required to give another entity a 1099, okay? An entity receives the money, not the individual. So as all our professionals out here, you're getting ready to retire, I'm ready to start a consultant, I'm going to real estate school, start your entity. That retirement you worked for all the years for, it protects you. That protects you, your asset. You're protected. So now, form the entity, let it carry liability. It is operating, not you. So a lot of times, this is how we avoid when we have limitation, our entities. So the biggest thing we want people to understand now is understand how we as businessmen and women must understand and operate our businesses correctly. We want people to understand you need not operate as a sole proprietor, but an entity. Let it be your corporation. Let it be your entity to carry throughout the year. Okay? All right? We can stop any questions.
All right. Thank you so much, Mr. Tennie. And we do have some questions that are in the chat, so I'm just going to grab a few of these. If you have an S Corp, can you elect to be treated as an S Corp 1 year and not in the next year if revenue declines in that year such that it is no longer worth it to be treated as an S Corp?
The answer, I would not say if my revenue decline, it's not worth it. Absolutely. Because if you're S Corp, it offsets your personal income. Okay. You don't have to make profit to be an S corporation. You can start an S corporation from the beginning. Because if you say I'm an S corporation, and guess what? And for people who say I'm working, I'm making $100,000 a year, but my S corporation lost $20,000. Guess what? That offsets your personal income. That offset that $100,000 now on the tax for $80,000. You want to remain as an S corporation. Okay. You do not, just because your revenue decline, don't cancel your entity. Remember what I said now. Let the entity operate for the next 10 years, not you. Because see, if you say I'm going to get rid of my S corporation and I decline, my income start declining, who's going to carry responsibility? You are now. You don't want that. If it decline, things don't work, close it. Start a new one. Close it. Shut it down. But you can't shut yourself down. You don't want to carry the liability. Let the entity carry the liability of declining. Okay?
All right. Next question. When, if at all, should you change your firm from an LLC to a corporation?
Again, let me explain to everyone. When you say you're a limited liability company or you are a corporation, I'm not saying you need to change it from. What you're saying is the LLC or the INC is the state structure. What you want to change is the filing requirements of these two entities. So when you said you formed the LLC, when should I change it to the corporation? Immediately. Change it to be taxed as an S corporation. You got 75 days to do the form. If you don't do it within 75 days, you use the late revenue procedure, filing Rev Prop 2013-30 right across the top of that form. But I tell people, if you form that entity, we have a whole department that works to assist you on that, you want to immediately be taxed as an S corporation. You should. Why? One, because most time when you start filing a commercial application, they want to see 2 years of existence at the Secretary of State. Okay? So I tell people again, don't think you got to make $1 million to be taxed as an S corporation. You don't. Remember now, this is called a startup. One thing about that too as well, if you say I'm starting my S corporation and I'm taking $5,000 out of my pocket to put in my company, guess what? That's a loan to the company. It makes $15,000 next year profit. No, it didn't, because it owes me $5,000 repayment of shareholder equity. That's the purpose of these entities, because if you take that money out of your pocket and you start your business, it is a loan to the company, which is not taxable, because you only pay tax on money once. And as an S corporation, as it could be a sole proprietorship too, you only pay taxes on money you earn, not money you borrow alone. Okay.
Okay. All right. And then another question. What do you write at the top of the form if it's more than 75 days after filing the LLC?
Filing revenue procedure, abbreviation, filing Rev Prop, filing pursuant, PROUS dot, we use, filing pursuant, Rev Prop 2013-30. But 2013-30. Any questions about it? We have a whole department, Cecilia, our business relations engagement manager, her department handles all of our assistance and questions with corporate structure, corporate entity for tax purposes. We handle all that for you. Our firm handles a lot of that for you.
All right. Next question. How do we pay ourselves and what forms do we need?
You pay yourself when you pay yourself, you give yourself a W-2, okay? Now stop. You pay yourself with a W-2, okay? Now, when you pay yourself, you put yourself through a payroll system, okay? Now, put yourself through a payroll system, all right? Now, when you pay yourself, we have a payroll department here. It gives you your W-2 at the end of the year, okay? It gives you your W-2 at the end of the year. So now remember now, you're going to file a 941 quarterly or semi-weekly, or you're going to file a 940 unemployment payroll. The form you give yourself when you pay yourself is a W-2, okay? Don't give yourself a 1099. I tell people, if you start taking these draws, guess what? You're going to give yourself a 1099 at the end of the year. Now, at the end of the year, you got to pay tax on all that money, okay? But now, if you pay yourself from a payroll system, it's going to give you a W-2. It's going to pay your Social Security, Medicare, and it's also going to pay your unemployment. Things do happen. For employers, things do happen. Guess what? Now you qualify for unemployment, okay? But again, when you pay yourself, you've already paid your taxes. So at the end of the year, if you say, I'm paying taxes on $30,000, and now you file your personal taxes, which along with your K-1 form, and your adjusted gross income is now down to $15,000, guess what? In most situations, here's your refund. Because you've already paid in taxes. That's why you put yourself on payroll. That's why we have a payroll department here that serves clients around the country in all of offices, in all the states we serve throughout the country. That's why you want to put yourself on payroll. You give yourself a W-2.
Okay. All right. Great information. Next question. As a C Corp employee and shareholder/owner of the C Corp, can I enter home office expenses on my personal 1040 tax form?
If you are working from your home and you are not being reimbursed, but you cannot put it on your C corporation. If you say, I got a C corporation, but I'm working from home, now you can't work for your business. Now, most people, but you must be, are you going to be filing Schedule C? Okay. And what I'm saying that an in-home office normally associates to a Schedule C, because remember now, if you're a corporation, if your corporation say, I want to lease space for you, you can do things like that, quote unquote. I would be very careful. But the answer is most in-home office associate with a Schedule C. Okay. There used to be a thing called unreimbursed employee expense. If you say I'm working from home, I bought a computer, I got to do that, and the company, they changed those rules a lot, that will go under unreimbursed employee expense. But I think they changed that quite a bit. The tax department has all that a lot now. But most time you associate an in-home office with a Schedule C or your business or your own Schedule C business. That's what you associate in-home office with. If you're a Schedule C and you employ of the company, the answer is no. Okay, because your company should be reimbursed for that. Okay.
Okay. All right. There are a couple of questions also about establishing an LLC or changing an LLC to a corporation. Someone says they were told that you had to have the S Corp established by January 1st, or you have to wait until the following year. Is it too late to have an S Corp for 2024 if it's not yet established?
That is absolutely not true. Okay. If I understand what you said, they told you have to have by January 1st, you have to wait until the end of the year. Absolutely not true. Okay. You can form an entity any time of the year, 365 days. You can form an entity any time within there. Okay. But what happens is when you form the articles of organization at the Secretary of State, you're only talking to the state. Now, remember what I said. You're only forming an entity within the state. When you go back to that EIN number, the most important piece of paper you can have, where people mess with the most, here's where you elect your filing requirements of those entities. An LLC and an INC is the structure in the state. The S corporation election is your tax filing requirements. I'm electing it to be taxed as an S corporation. The answer is no. You can file anytime an entity. And anytime you can file a 2553, you just got to put the date in which the state recognized it. I don't care when you did it. But if you formed an entity 2 years ago, we can go back now and change the filing requirements for 2024, or we can go back to the beginning of 1/1/2023. But now, if you form your entity in March of 2023, March 13th, I can only go back to March 13th from when you began the entity. So that is absolutely false. You can form an entity anytime throughout the year, and you can do the 2553 within that as well. You can still be a sole proprietorship if you want to. You can still, but that's absolutely false.
Okay. All right. And we're going to wrap up with this one because our time is wrapping up here. I'm a sole member, PLLC. How should I file my taxes?
You are a professional limited liability company, okay? All right, PLLC. But the question is, look at your EIN letter. Give our office a call. What is your tax filing requirements? Your question was a great question. I'm a PLC, which is called a professional limited liability company. How should I file my taxes? What is the filing requirement when you got your EIN number? That is the way you have to file the taxes on how it was structured when you check that box. Pull that letter up. Look at that letter. Send the office. We'll tell you. It's either going, if you see nothing in it, you are a sole proprietorship. But in the middle, it's going to tell you a 1065 or 1120. Okay. Now, if you're 1120, you got to file 2553 because now you're still a sole proprietorship. Okay. So it's a way your letter, your EIN letter that you gave, I showed you, what does that say? That's how you have to file taxes. But we can go back and change it to a correct filing requirement. Okay. All right.
All right. Well, thanks again so very much, Mr. Tennie. We appreciate you being with us. And so on behalf of the Hub Office and the North Carolina MBDA Center, thank you so much for being with us. Your expertise for strategies to legally minimize taxable income are greatly appreciated. Thank you to our businesses and our partner organizations for taking time in your schedules to join us. We know that the information is valuable to help you to understand how to customize good tax strategies for your business. And thank you, of course, to our Hub Office staff, to our Hub Office Interim Director, Deputy Director, John Gunther. And thanks again to our MBDA support team, Angela Sellers, Regina Boney, Kayla Cox, and Brandon Hall for your support in putting this webinar on today. And please, to everybody, do have a productive 2024. And thanks again for joining us on today.
Can I say something real quickly?
Yes.
Our firm is definitely, we're looking at certain clients around the country, but we are starting a podcast on next Wednesday, 10 a.m. We have the Business Development Podcast, okay? And that's our brand new podcast. Please follow us. If you know got LinkedIn, put in Darrell Tennie or the Tennie Group. Follow me on LinkedIn. But our podcast starts, Business Development Podcast starts. We're going to have guests. We're going to be introducing project presentation again next week. But we have financial guests throughout the country on our bi-weekly podcast. But our podcast is called Business Development. Please go on LinkedIn, Darrell Tennie, put my name in, Darrell Tennie, and follow us on LinkedIn. And our podcast starts next Wednesday morning, Business Development at 10 a.m. We're going to have people throughout the year from banks, institutions, all about business development. And we work with clients across the country, and we want to be your tax and accounting firm. And we would love to come visit our corporate office here, right here on Nightdale. Okay.